Health insurance is confusing. Deductibles, out-of-pocket max, coinsurance, copays, what do they all mean? How can I know that I'm going to have the coverage I need and I'm not paying too much? Hi, my name is Daniel and I am not a financial expert. I make videos for a living and just like you, I'm a human. A human who sometimes has health-related needs. Thankfully, I have health insurance. Not so thankfully, it's time to renew, and I don't really understand what all these terms mean. As I was reviewing the health plan options available to me, I was bombarded with jargon. Deductible, premium, coinsurance, copay. I kind of know what some of these words mean, but it was pretty confusing, and I didn't know how to know I was making the right choice. Honestly, I felt pretty dumb. I work in the finance industry, making videos to educate people about finances. Shouldn't I know more? Sometimes it feels like these terms were created just to confuse me so the insurance company can make more money. So instead of feeling like a victim, confused about insurance terminology, I've decided to enlist the help of Stewardship's health plan advisor. Our hope with this video is to offer a simple guide to some of the terms that you'll see so that you can make an informed decision. The first term I asked him about was the insurance premium.
Hi, my name is Ryan and I'm the health plan advisor here at Stewardship. So the premium is the amount you pay every month to be enrolled in the health insurance plan that you're on. The premium can go up or down depending on the level of benefits that your plan has. So a plan with richer benefits tends to have a higher premium, whereas a plan with a higher deductible tends to have a lower premium.
So most of the time, a lower premium means a higher deductible. But what's the deductible?
Yeah, the deductible is usually the amount you are responsible to pay for first should something happen. So for example, if you have a $2,000 deductible and you have an emergency event, you're going to pay the first $2,000 of that event and it counts towards your deductible.
But when I was looking at the insurance options, I saw deductible and out-of-pocket max.
So once the deductible is reached, usually there's a max out-of-pocket, and that's the most that you would pay in a calendar year. So it's very important to know what that amount is. Now, the difference between the max out-of-pocket and your deductible is usually met with coinsurance. And coinsurance is the percentage that you pay once you've reached your deductible. So again, the deductible you pay 100% of, and then in between the deductible and the max out of pocket, you're going to pay a percentage. And that, again, depends on the benefits of your plan. It can be anywhere from 50% to 10%.
So coinsurance is different than copay?
Yes. Copay is a defined amount that you pay for a specific service. Again, that could be a doctor visit, could be a specialist visit, urgent care, prescription. Some plans even have a copay for an ER visit. That could be $1,000.
Oh, okay. So the copay is the amount that is sometimes listed on my insurance card.
Yep, so copays are often listed on your insurance card. They're also listed on the summary of benefits. It's usually about an 8-page document that outlines line by line what to expect for different kinds of services. If your plan says $50 for an urgent care visit, that's what you pay for that visit. If it doesn't have a copay, the urgent care might bill you $250. If you haven't met your deductible yet, you pay 100% of that. If you have met your deductible, then you might pay 50% of that. So then you're gonna get a bill for $125 for that visit. But let's say you've reached your max out of pocket. You're not gonna get a bill because you've reached your max out of pocket. That's the most you are expected to pay in a calendar year. You might also notice on the right side of the summary of benefits a term called prior authorization. That simply means that the insurance carrier needs to authorize your doctor for specific services. And that's usually something your doctor takes care of behind the scenes.
Do I need to know about these terms if I'm choosing a plan through my employer, or just if I'm going with healthcare.gov?
These health insurance terms apply across both employer options, short-term options, and healthcare.gov or marketplace options.
Is all this the same if I'm looking into bill sharing?
Yeah, bill sharing is different. Bill sharing has its own jargon because they're not legally allowed to use insurance jargon. Depends on the bill sharing organization. The one that we're partnered with, Medicare, they refer premium as a share, your monthly share. They don't have a max out of pocket, they have an annual household portion, and that's the amount that the household is expected to pay over the course of a year, depending on when their membership starts. You don't have a policy or a premium with a bill sharing option. You have what's called a membership.
Even if I have coverage and I'm paying a monthly premium, I still have to pay for all of my medical expenses. So why do I even have health insurance?
The goal of insurance is to offset risk. Let's say you have a $15,000 event happen and your deductible is $7,500. You owe half of what the event has cost. So after you reach your deductible of $7,500, you're gonna pay a defined coinsurance amount that can range anywhere from 50 to 10%. So 50% of what's left of $7,500 is $3,750. But if your max out of pocket is $8,900, you won't pay anything past that $8,900. A few years ago, I got bit by a rattlesnake and the medical bills were about $130,000. The plan that I had in place limited what I was exposed to or the risk that I was exposed to. And so I reached my max out of pocket on the plan that I'm on, and the company paid everything after that.
Wow. So how do I choose the best plan?
For those that don't use health insurance very often, it might make sense to have a deductible that's close to the max out of pocket. Usually the max out of pocket is standardized, especially if we're looking at marketplace plans or healthcare.gov plans. You pay more to have that deductible lowered. So if you don't anticipate going to the doctor very often, or if you're going to go, it's because something major happened, then you're gonna reach that max out of pocket probably in both scenarios. So it doesn't make sense to pay more for a lower deductible if you don't anticipate reaching the deductible unless something major has happened.
So I still have to pay for my monthly premium even after I've reached my out-of-pocket max.
Correct. It also might make sense to pick a plan depending on your health. Some people use their health insurance more often than others, and so it helps to review your plan every year to see if your needs have changed or the plans have changed, because we always want to make sure that you have the right plan for the year that you have that coverage.
Huge thanks to Ryan for taking time to explain those terms. My biggest takeaway was that health insurance protects me from risk. Medical events can be expensive, and by paying a relatively small amount every month and another relatively small amount for each event, I can get the care I need without it costing an arm and a leg. The reality is, insurance is complicated, and it wasn't made complicated just to confuse us. It's a gigantic system that's trying to meet the needs of so many people, and something that big is bound to have complexities. With the help of a wise and loving independent health plan advisor, you can actually understand the options that are available to you, consider your situation and your potential healthcare needs, and choose the plan that meets your needs and fits in your budget. If you're in Arizona and you need help navigating the health insurance marketplace or Medicare, schedule an appointment at the link in the description, and we would be honored to help. Don't worry, you'll talk to Ryan, not me.